Are you ready to gain financial freedom? Discover how real estate investing can be your key to success. Do you want to gain financial freedom and make money? Real estate investing can be the answer. But is it too much to learn about the different types of investments and the costs associated with them? Learn how house hacking, mid-sized commercial buildings, and proper analysis helps you succeed and make informed decisions. Take this journey with us and make real estate investing your key to success. Take the first step towards financial freedom and subscribe to our Life Hacks channel. Keep watching to learn more about the different types of real estate investments and how to make informed decisions. Start your journey to success today. Real estate investing is an attractive option for many. It can help you generate income, diversify your portfolio, and become financially independent, all through the process of buying property with the goal of earning rental income or capital appreciation over time. There are several different types of real estate investments, including residential properties, single-family home rentals and multifamily homes, commercial buildings, office spaces, retail stores, and even land development. With so many options available, it can be confusing to know where to start when considering taking that first step into real estate investing. One important thing to consider before you begin is understanding how returns will be generated from any real estate investment, whether it's from passive or active income forms of involvement. What type do you prefer, short-term versus long-term holding? There are key questions that every investor needs to consider as part of their research before the beginning journey in this exciting field, so at least there's no need to take blind leaps forward. After all, what kind of moneymaker would suit my lifestyle, active quick fix flipping, or something longer lasting like becoming a landlord? Are you thinking about investing in real estate? It can be a great way to make money, but it does require some initial capital. You can choose from a variety of strategies like fix and flip, long-term rental investments, or land banking. The strategy you choose will depend on your goals, how much time and money you're willing to invest, and how much comfortable you're risk taking. But before you make your first purchase, you need to understand the costs associated with real estate investing, like research fees, lawyer fees, and closing and transaction costs. Knowing these costs will help you set realistic expectations when it comes to making money from real estate. So are you financially prepared to take advantage of real estate investing opportunities? Investing in real estate can be a great way to make money, but it's important to understand the costs associated with it before you get started. You need to do some research, which can include things like local market reports and analytics, plus inspections of the property condition or appraisal report. You also need to pay for a lawyer to review contracts and give you advice on regulations and closing transaction costs, which may include a lender's commission fee if you get a loan through them. Once you've purchased the property, you also need to pay for ownership expenses like land improvements and common bills like taxes and insurance. With all these costs taken into consideration, what strategies can you use to get started with potentially lower risk? What strategies do you think you can use? Leave a comment below and let us know your thoughts. Real estate investing has many different ways to get started. One option is to buy a smaller duplex or triplex property and house hack it. This is a great way to start building wealth without breaking the bank, while still providing affordable rentals for tenants. As your portfolio grows, you may want to consider mid-sized commercial buildings. This can offer greater cash flow potential like standardized mortgage rental units, and they offer multiple levels of income streams like renting out office space or optimizing a youth hostel in unused portions of the building. You can also look into investing in apartment blocks and even development projects, but these strategies come with their own unique risks like unknown local population growth trends and economic conditions affecting profit margins over time. It's important to do your own research before investing so you can understand the risk versus rewards that will help you create long-term success. So what decisions do you need to make between short-term ROI gratification and longer-lasting passive streams? Real estate investing can be very profitable, but it's important to understand and consider any risks that you make before your investment. One way to do this is by conducting due diligence, helping you protect investors by giving them detailed information about a property's financial performance, legal obligations, and market conditions in a certain area. This can involve analyzing evidence from appraisals, surveys, and other reports that give an objective overview of the potential for long-term returns in the area. Additionally, researching local markets helps you identify areas where capital values are increasing faster than average. So if rental income increases over time, these investments can be very profitable. It's all about making sure every decision involving rental activity takes both rewards and risks into account, because when you have all the facts, you can make decisions that lead to greater growth over time. How do you make sure that you have the right analysis procedures for each prospective deal to ensure the best results? Doing your due diligence is essential when it comes to making smart real estate investments. This means researching the area you're in to invest in, researching and reviewing past performance records of potential properties, understanding their condition, talking to experts who provide important insights into zoning regulations, financing options, and other details. After investigating adjacent neighborhoods that could have an impact on future returns. After all this research, you can make an informed decision about whether an investment opportunity is worth taking a risk on or not. But even if there's a potential for high profits, how do you secure the funds up front? That's what we answer next. What strategies are available for sourcing startup capital for real estate investments? What strategies do you think are available? Leave a comment below with your answer. When it comes to financing your real estate investments, you have a few options. You can go with traditional lenders like mortgage companies or banks, or get a home equity or private capital loan. Each option has its own benefits and requirements for qualification, so it's important to think about how much money you need up front and how long you need the funding for. But aside from that, you should consider the risks associated with these deals. Before you pursue an investment opportunity, do your due diligence to identify both risk and reward. Once you've done that, where do you go next as an experienced real estate investor? When it comes to managing real estate investments, having a solid strategy is essential for success. To start, you need to track your cash flow. This means keeping an eye on your income and expenses so your budget stays balanced every month. There's also maintenance, making sure repairs and renovations are taken care of to keep your investment property in good condition and make it attractive to potential tenants. Finally, tenant management should be organized from start to finish, including background checks for all parties involved, helping ensure the safety and well-being within the rental agreement. As an experienced investor, you may find yourself in situations where you have to make decisions quickly. How can you trust that relying only on data will yield good results even if you feel uneasy about making big decisions? Now that you've done your research and weighed the risk and rewards of investment opportunities, you need to make a decision. Think about what your goals are. Do you want to make a quick flip for immediate income, or are you looking for something more long-term, like becoming a landlord? You need to consider what's best for you. You should also check if you have enough money to get started. Have you taken into account other costs like legal fees when looking at financing options? Are you still getting a good deal no matter what you choose? Make sure you have all the answers you need before you move forward. Doing your due diligence properly helps you make sure that your real estate investments are profitable and don't take up too much of your time. The last question is, how do you know if your real estate investments are giving you more than just financial rewards? Real estate investing can be a great way to generate income, diversify your portfolio, and become financially independent, but you need to understand the costs associated with it before you even get started. You need to do research, pay for a lawyer, and understand ownership expenses. There are several different types of real estate investing, like residential properties, commercial buildings, office spaces, retail stores, and land development. You can also choose from a variety of strategies like fix and flip, long-term rental investments, or land banking, depending on your goals and how much risk you're comfortable taking. Do your due diligence is essential when it comes to making sure you make smart real estate investments, and you'll need to source startup capital. Finally, when it comes to managing real estate investments, having a solid strategy is essential for success. By understanding the risk versus rewards and doing your research, you can make informed decisions that will lead to greater growth over time. Are you ready to learn the risks and limitations of AI-powered trading? If you want to stay ahead of the curve and protect your investments, don't miss out on the next video of the dark side of AI-powered trading, risks and limitations. Tune in now to learn more and stay ahead of the curve.